Hello and great welcome. So after having finished topic 10, now we shall be moving over to next topic. I've already told you topic number 10, 11 and 12. All these three topics are very vital from the examination point of view, and this topic relates with what we call redemption of debenture through sinking fund. What exactly is this? In order to comprehend this one, kindly pay attention over here. We presume there is an entity, and we presume that this entity has issued 500 lakhs worth of debenture. 500 lakhs worth of debenture. And I have already told you so many times that whenever an entity issues debenture, at the time of issue itself, company need to clarify that after what period of time these debentures are going to be redeemed. So we presume in this particular case that company had committed at the time of issue that we are going to redeem these debenture at the end of, say, fourth year. At the end of fourth year. Even the directors of this particular company know that at the end of the fourth year, we shall require near about 500 lakh rupees to make the payment or to honor our commitment. And 500 lakh is not a what we call meager amount, isn't it or not? It's a pretty huge amount. So in practical life, what happens, the normal policy of a company also know that whenever the time period of redemption will approach, at the time we may require heavy amount of cash to honor the commitment. So they want to play safe. So at the time of issue, when company actually issued 500 lakhs worth of debenture, let us say the directors of this particular company decided that every year out of profits, we are going to set aside an amount, so that by the time we reach the end of the fourth year, we have enough what we call balance and we need not require to worry about regarding the payment. For example, in this particular case, let us say directors of the company decided that every year we are going to set aside 120 lakhs. So when company will reach at the end of the year, the directors of the company will pass an entry profit or loss account debit to sinking fund. This entry they are going to pass and they will set aside 120 lakhs. Are you getting my point or not? Indirectly, you can say the directors of the company has decided to save a part of the profit. So the directors of the company have decided that we are going to set aside every year 120 lakh, 120 lakh, 120 lakh. So that by the end of the fourth year, we have at least out of this savings 480 lakh, 120, 120, 120, 120. That makes it 480 lakh. And rest of the balance we can arrange easily. So you can see at the end of the fourth year, there will be less load upon us as far as repayment is concerned. I hope you got a bit of idea actually what exactly sinking fund is. That means under the concept of the sinking fund, in order to redeem the debenture, every year directors of the company actually decide to set aside a part of the profit, so that by the time they reach the end of the maturity period, they have at least enough savings so that they do not have any problem in repayment of the what we call debentures. Is it clear to you? Now, some of you may actually wonder in this particular case that why I took this figure of 120 lakh. Why I did not took the figure of 125 lakh. Because if I would have had taken the figure of 125 lakh, in that case, by the end of the fourth year, we would have had 500 lakhs. The reason being is that, now let me clarify this point and this confusion also. Here I have intentionally taken a figure of 120 lakh. The directors of the company, in order to redeem 500 lakhs worth of debenture, have decided that every year they are going to actually set aside a part of profit. Why? The reason is that, see here, at the end of the first year, they have actually set aside out of profit 120 lakh. Because we have already reached the end of the first year and still actually 3 years are there in the redemption period, isn't it? So after setting aside this amount, what directors are going to do, they are going to invest it in the what we call gilt-edged security. When we say gilt-edged security, it means such security, and it generally means government security. Correct? Gilt-edged security or such security wherein actually we do not have much problem in what we call sale and purchase. Is it clear to you? Such securities are known as gilt-edged securities. In simple words, we are going to now invest this amount. So we are going to invest this amount, then we are going to pass an entry, sinking fund investment account debit to sinking fund investment account debit to bank account. So whatever amount which we set aside out of profit, this amount we are not going to keep with ourselves for the next 4 years. There is no use to keep this amount ideally. So we should use it somewhere so that we get some benefit. So directors, what they are going to do, they are going to invest in what we call government securities. Let us say these investments carry 10% interest. So you must have seen when we have invested this amount, then we will get some interest also. So by the time actually when we will reach the end of the year, end of the fourth year, we have 480 lakh out of our savings, that is 120, 120, 120 and 120, and also 20 lakh we will cover through what we call interest incomes. So this is the policy and this is what we call the entire concept of sinking fund. Is it clear to you? So under the concept of sinking fund you have, and moreover, this fund is known as sinking fund. The reason is that because we know that ultimately this fund is going to sink because we are going to use these funds in the redemption of debenture. To make the point more clear, let's have a look over what we call question number 11.1. So here is the question. In this particular question, it is given that 7Cs Limited issued on 1/1/2023 5,012% debentures of 100 each. How many debentures we have issued? 5,000. Face value of the debenture is 100 each. And these debentures are repayable at the end of the 4 years at par. So we have issued 5,000 into 100, 5 lakh worth of debentures, and these debentures are to be redeemed at the end of the 4 years. Correct? Also, it is clearly mentioned it is decided to create a sinking fund. Annual installment 1,20,000. Now 1,20,000 is the same figure which I was talking about earlier. Every year directors are going to set aside a part of the profit. This set aside figure is known as annual installment or annual appropriation. Further, this line, the investment were expected to earn interest at 5% per annum. I hope you got this particular point. I told you whatever amount which we are going to extract out of profit, this amount we are not going to keep with ourselves. We are going to invest it somewhere. So here it means that whatever amount which we have saved and invested, those investment carry an interest of 5%. At the end of the fourth year, investment was sold for rupees 4 lakh. Obviously, when we are going to reach the end of the fourth year, we require cash. So whatever investment which we have in our hand, we are going to dispose them off. So at the end of the fourth year, we sold out our investment for rupees 4 lakh. And also debentures were redeemed, prepare necessary ledger account. Actually, generally, when you are going to get such questions, you are not going to get entries. Let me make it absolutely clear. However, in order to give you a better idea, just have a look over here. Because the important point is that you must understand the topic in a better perspective, isn't it or not? So, just pay attention here. This is your topic number 11, I think so. So, section 11. Here we shall write section 11. And under section 11, we are picking up question number 11.1. 11.1. In order to understand this particular question, here, just kindly pay attention. First, I stretch a line, correct? So it is given in the question that this company on 1/1/2023 has issued debentures. And company has issued 5,000 debentures of 100 each. 5,000 debentures of 100 each, isn't it? That means 5 lakh. So 5 lakh worth of debenture this particular entity has issued. So I will write here 5 lakh. Further, when I am going to reach the end of the year, presuming that our first year will end over here, because we have issued the debenture of 1/1/2023, we presume that calendar year is the what we call accounting year, so 31/12/2023. This is end of the first year. So at the end of the first year, because it is given in the question that annual installment is 1,20,000. It is given in the question. So annual installment means the directors of the company have decided that we are going to set aside every year 1,20,000 out of our profits, as I told you earlier also. So similarly, when we are going to reach the end of the second year, and similarly third year, and finally the fourth year, just wait. So at the end of the second year, that is on, just wait, I think it is not pressing on your screen. Okay, let me make it this way. So at the end of second year, third year and fourth year. So 31st of 12, 2024, this will be the end of the second year. So at the end of the second year, again, we are going to set aside. In fact, we are going to pluck out of profits 1,20,000. This is the point I just want to make, isn't it or not? Then similarly, at the end of the third year, that is on 31st of 12, 2025, again, we are going to set aside 1,20,000 out of profit. And likewise, when we are going to reach the end of the fourth and final year, 31st of 12, 2026, again I am going to set aside 1,20,000. Is it clear to you or not? So this is the scenario, and another important point is that it is also given whatever amount which we are going to set aside, this amount is going to be invested, and this amount is going to be invested. This amount is going to be invested, and we are going to get a return of 5%. It is also mentioned in the question. Further, it is also mentioned in the question that at the end of the year, we sold investment for 4 lakh. Sold investments for 4 lakh. So this is the question. Is it clear to you or not? I hope it is clear. Now, if it is clear, now the most important part is that although I have already told you entries are not needed, but just to give you a better perspective, actually we are doing the entries also. Here, I'm writing entries just to see to it that you acquire a firm grip over the conceptuality. Now, before I write the entry, I write here year 1 at the end of year 1, that is on 31st of 12, 2013, then end of year 2, then end of year 3, and finally end of year 4. End of year 4. Obviously, my first year will end on 31st of 12, 2023. Second year will end on 31st of 12, 2024. And likewise, third will end on 31st of 12, 2025. And fourth year will end on 31st of 12, 2026. Isn't it or not? Well, as I told you, my first entry in the first year will be, when I'm going to reach the end of the first year, from the perspective of the company, you have to look at it. Is it clear to you? From the perspective of the company, if you are going to have a look over it, you are going to find that at the end of the first year, we are supposed to actually pass this particular entry, as I told you. Intentionally, I am leaving some space over here. I told you the first thing is that when we are going to reach the end of the year, we are going to actually pluck out a part of the profit and transfer it to sinking fund. And for that, we need to know what exactly is the amount of the annual installment. We have already seen that amount of the annual installment happens to be 1,20,000. So in this particular case, at the end of the first year, my first entry will be profit and loss account debit. You can also write surplus account debit, because generally this transfer is made out of a statement of surplus. Or simply you can write profit and loss account. It automatically means that we are transferring, correct, from a statement of surplus. So P&L account debit to sinking fund account. So I will write to sinking fund account at the end of the first year. At the end of the first year, obviously my amount will be 1,20,000. So 1,20,000, 1,20,000. At the end of the first year. If you remember, I talked about this particular fact that when we are going to reach the end of the first year, we are going to set aside a part of this particular profit. But at the same time, we are at the end of the first year. Still 3 more years are remaining. There is no point in keeping this amount with us ideally. So we should invest it somewhere. So we are going to invest this amount. And for that, we are going to write an entry, sinking fund investment account debit to bank account. Sinking fund investment account debit to bank account. So you will invest this amount also, 1,20,000, 1,20,000. Only 2 entries are needed in the first year. Is it clear to you? The first entry is for appropriation of profit. That means some part of the profit will be appropriated and it will be transferred to sinking fund. And then you are going to what we call invest this particular amount. Is it clear to you or not? So as far as first year is concerned, entries are over. Now we move over to the next year. In the next year, you need to understand this point quite well. In the next year, because we have already reached the end of the first year, now we are going to reach the end of the second year. When we are going to reach the end of the second year, the first thing which we need to do is to see to it that a time period of 1 year has already gone by since the time we made our investment. See here, we made the investment at the end of the first year. And now we are at the end of the second year. At the end of the first year, we made an investment of 1,20,000. So quite obviously, as I said, from this particular point, end of the first year to the second year, now 1 year period has gone by. So first thing which I am going to do is I am going to compute the amount of interest. As I have already told you, the rate of interest is given in the question as 5%. So that means now on your investment, you are going to receive interest at the end of the second year. And when you are going to receive the interest, generally the entry is bank account debit to interest on sinking fund investment account. This is generally the entry. Bank account debit to interest on sinking fund investment account. And ultimately this interest on sinking fund investment account is transferred to sinking fund. Ultimately, this interest is also going to be transferred to sinking fund. So instead of writing these two entries, you can directly write a single entry, that is bank account debit to sinking fund. For receiving interest, you can directly write bank account debit to sinking fund. As you can see, this entry will cancel. So you will be left off with bank account debit to sinking fund. That means, try to understand this point. That means, in the first year, obviously, we are not going to receive any interest. So that is why in the first year, no entry for interest will be there. But in the second year and subsequent year, you are going to pass three entries. The first entry will be for interest. Bank account debit to sinking fund. This entry is for receiving interest. Bank account debit to sinking fund. How much interest we are going to receive? As I just told you, your amount of interest will be equal to 6,000. So bank account debit to sinking fund, you are going to write here 6,000. Is it clear to you? This is your first entry in the second year for receiving the interest. Is it clear to you or not? Once you have received the interest, now you will have to pass these two entries. Again, at the end of the second year, you will pass this entry, profit and loss appropriation account or profit and loss account debit to sinking fund account. This figure will remain same. Again, you are going to extract 1,20,000 because you have already decided that at the end of each year, we are going to set aside a part of the profit and the amount is 1,20,000. Now, at the end of the second year, you are going to make the investment. Now, could you tell me how much amount I should invest? Should I invest 1,20,000 or something else? Because in the current year, out of profit, you have saved 1,20,000 and also you have received an interest of 6,000. So better to invest 1,26,000. So that is why at the end of the second year, when we are going to invest the amount, it won't be 1,20,000, it will be 1,26,000. That means amount of interest which you have received and the amount of appropriation which you have made. So 1,26,000 will be your investment. In the first year, you made an investment of 120. By the end of the second year, your investment is equal to 1,26,000. Is it clear to you? Now we are going to reach the end of the what we call third year. At the end of the third year, as I told you, when I am going to actually compute the interest, because we have already computed interest on this particular date. Now from this particular date to this particular date, what will be my interest? First of all, I need to know what is my total investment, because now your total investment has gone up to 1 lakh. Your total investment is equal to, let me check, in the first year you made an investment of 120. And in the second year, you have made an investment of 1,26,000. That means your total investment is 2,46,000. By the end of the second year, your total investment is equal to 2,46,000. See here, actually let me here do it in a clear manner so that you understand it better. Just try to understand this point once again. This is the timeline. And at the end of the first year, as I told you, my total investment is equal to 1,20,000. However, by the end of the second year, my total investment is how much? Because 120 investment we already made at the end of the first year, and in the second year, I made an investment of 1,26,000. So that means my total investment is equal to 120 plus 126, that is equal to 2,46,000. You need to understand, now your total investment by the end of the second year, is equal to 2,46,000. So when I'm going to now enter into the third year and reach the end of the third year, how much interest I'm going to receive. So for that, I need to understand what exactly is the amount of investment by the end of the second year. By the end of the second year, as you can see, total investment is equal to 2,46,000. So now you are going to receive interest at the end of the third year, that is on 2,46,000. On 2,46,000, at the rate of 5%, you are going to compute the interest. I think it will be equal to 12,300. So 12,300 is the amount of interest which you are going to receive. So this is the point which you need to take care of. So at the end of the third year, now again, as I told you, I will have to first of all compute the interest. So in the first year, there will be 2 entries, and in the subsequent year, then we are going to pass 3 entries, as you can see. So in the third year, now this is my third year. So in the third year, first of all, I am going to receive 12,300, and how we have computed it, that is 2,46,000 into 5%. Is it clear to you or not? And again, these two entries will be repeated. Once again, I am going to transfer out of profit 1,20,000 to sinking fund account. And now again, I am going to invest. But how much amount I am going to invest at the end of the third year? When you are going to invest, the investment amount will be equal to interest of that particular year and appropriation of that particular year. You have appropriated 1,20,000 in the current year, third year, and you have received interest of 12,300. So you are going to invest this much of amount, 1,20,000 plus 12,300, that will be equal to 1,32,300. Is it clear to you or not? So 1,32,300 now I am going to invest at the end of the third year. So with that, entries portion is completed at the end of the third year. Now we will enter into the fourth and final year. But before that, I need to understand what exactly is the amount of investment by the end of the fourth year. As you know, in the first year, we made an investment equal to 1,20,000. In the second year, we made an investment equal to 1,26,000. And in the third year, as you can see, we made an investment equal to 1,32,300. 1,32,300. Isn't it or not? This is the amount of investment by the end of the third year. So that means your total investment by the end of the third year is 120 plus 1,26,000 plus 1,32,300. Is it clear to you or not? If you are going to add, it will be equal to, I think, 3 lakhs something. 3,78,300, 1,20,000 plus 1,26,000 plus 132,300. Right, 3 lakhs. So by the end of the third year, we may say our total investment is equal to 3,78,300. So in the fourth year, when I am going to receive the interest, because by the end of the third year, my total investment is equal to 3,78,300. And I am going to receive an interest of 3,78,300 into 5%. That will be equal to 18,950. So this much of interest I am going to receive in the fourth year. Is it clear to you? So in the fourth year, my first entry will be bank account debit to sinking fund account. And amount of interest which I am going to receive, as I told you, will be equal to 18,915. So 18,915. And this much of amount of interest we are going to receive. Now, sometimes students get confused in the examination that should we transfer to P&L, out of P&L to sinking fund in the fourth and final year also? Yes, because every year you have decided that you are going to transfer. So even in the final year, you are going to transfer. Now, the most important point is that because we have already reached the end of the fourth year and we are supposed to redeem the debenture at the end of the fourth year. So there is no point in making any investment at the end of the fourth year. Why? That means in the fourth and final year, we are not going to make any investment because within next few days, and technically speaking, within next 7 days, we are supposed to redeem the debentures. So there is no point in making the investment because we are not going to earn any interest, isn't it? So no investment will be done in the fourth and final year. Now, as you have seen, just allow me a second. As you have seen, in the first year, only 2 entries are needed. whereas 3 entries are needed. In fact, technically speaking, only 2 entries are needed at the end of the 4th year, but there are some other entries. Now, when you are going to reach the end of the 4th year, you have to, at the end of the final year, should I say that way round, in this particular year, first of all, you are going to receive the interest. Number 1, you are going to appropriate the amount. However, you are not going to make any investment. Now, you are going to actually sell your investment. When you are going to sell your investment, your entry will be bank account debit to sinking fund investment account. Is it clear to you or not? So this is another point. So at the end of the final year, you are going to sell your investment. Now you have sold your investment for rupees 4 lakh. So this is how you are going to pass the entries. However, in the examination, you are not asked entries. Rather, you will be asked to prepare the necessary ledger account. Is it clear to you? Necessary ledger account. How to prepare the necessary ledger account, I will let you know. But first of all, you need to understand it quite comprehensively. I hope you have understood and you have noted it down too. So now I can rub it off. So now we are supposed to prepare, as I told you, some ledger account also. So ledger, necessary ledger accounts. So what are the necessary ledger accounts in this case? Ledger account. There are 2 main accounts as we have already seen. One is sinking fund account. One is sinking fund account. Sinking fund account is also known as debenture redemption fund account. It is also known as debenture redemption fund account. So you are going to prepare a sinking fund account first, correct? I think this much of space is enough. So first we are going to prepare a sinking fund account. After that we are going to prepare sinking fund investment account. Sinking fund investment account. Sinking fund investment account. Sinking fund investment account is also known as debenture redemption fund investment account. Sinking fund investment account. Is it clear to you? So this is how you are supposed to prepare these accounts. Now, in order to prepare these accounts, just allow me a second. First of all, you will have to write date, then details or particulars, whatever you may like to write, and then finally the amount. Similarly, date, details, and amount. Correct? Here also we will have to repeat the process. Date, details, and amount. And amount. Then date, details, and amount. You have to think logically. If you are going to cram the entries, you will never ever be able to learn it. The best way is that you should understand that when you are going to reach the end of the first year, the first year will end on 31st of 12/2023, as I have already told you. Is it clear to you? You have to think logically in the sense I have already told you that at the end of the first year, you are going to transfer a part of profit to sinking fund. Obviously, when we are going to transfer a part of profit to sinking fund account will increase. So, sinking fund account will increase on account of P&L. So, you will simply write by P&L, or you can also write surplus. Correct? So here when we are writing P&L, indirectly it means statement of surplus account. So we have transferred 1,20,000, so I will write 1,20,000. After that we pass the entry sinking fund investment account debit to bank. In fact, we need not require to cram the entry. We have to think logically. As I told you at the end of the first year, the first thing which we are supposed to do is to appropriate a part of the profit, and then we are going to actually invest it. And when we are going to invest it, your entry will be sinking fund investment account debit to bank account. So here in the column of date, you are going to write 31st of 12/2023, and then you are going to write here to bank, and the amount invested is equal to 1,20,000. 1,20,000. Is it clear to you? As far as first year is concerned, it is over. You need not require to balance at the end of the first year. Is it clear to you? Although you can balance if you want, but there is no point. It will unnecessarily what we call waste your time. So only 2 entries are needed at the end of the first year. Now you immediately move over to the next year. Here, first of all, you write 31st of 12/2024. Now we have reached the end of the second year. Just try to learn, try to actually recapitulate what I said earlier. When we are going to reach the end of the what we call second year, the first thing is that we are going to receive the interest. And whatever interest which we are going to receive, it will be credited to sinking fund and not to sinking fund investment account. So that is why here I am going to write by bank. This is my first entry. By bank, you can write in bracket interest. We have received an interest of rupees 6,000. This is the first thing. Also, at the end of the second year, we are going to appropriate a part of the profit. So once again, I will write by P&L, annual appropriation. Amount of annual appropriation will remain same, 1,20,000. So these two things, correct? And finally, we will have to invest the amount. So on 31st of 12/2024, now I am going to make the investment. So sinking fund investment account debit to bank account. But we must exercise care that our investment is equal to 1,26,000. However, when we are going to reach the end of the what we call second year, then it is mandatory that we must actually start tallying it. Now I will tally it. If I am going to tally this account, my total is equal to 2,46,000. Remember one thing, we are tallying these figures on 31st of 12/2024. So at the end of the second year, total balance carried down is equal to 2,46,000. That means at the end of the second year, total balance in sinking fund investment is equal to 2,46,000. Immediately you write here 1/1/2025, that is start of the next year. So it shows that your total investment at the end of the second year is equal to 2,46,000. Again, almost same process you will have to apply here. You are going to tally this. Total will be equal to 2,46,000 only. So 2,46,000. Here you are going to write date 31st of 12/2024. And you are going to write here balance carried down. Balance carried down. Is it clear to you? Immediately you bring this balance 1/1/2025 on the opposite side. Balance brought down. Now balance brought down is equal to 2,46,000. That means balance brought down in sinking fund is also 2,46,000 and your investment is also 2,46,000. Now we will move to the end of the third year, that is on 31st of 12/2025. Obviously, first of all, I am going to receive the interest, bank account debit. As you know, in fact, if you are preparing ledger account, it becomes a little bit more easier to compute the amount of interest. Whatever balance is there in the investment account, 2,46,000, you simply apply the interest figure, interest rate. So 5% of 2,46,000, 12,300 will be your interest as we computed earlier also. Again, I am going to transfer from the profit. So by P&L, 1,20,000. By P&L, 1,20,000. So first, see here, we have already reached the end of the third year. The first thing which we did is entry for what we call interest, then appropriation, and now I am going to invest. Total interest received and total amount appropriated. So my investment will be equal to 31st of 12/2025. I am going to write here to bank, and the amount will be equal to 1,32,500. 1,32,300. So we have passed all the entries related to the third year. So now we must balance it. At the end of the third year, it becomes important to balance the same. Is it clear to you or not? So 31st 12/2025, balance carried down. So our balance carried down in sinking fund is equal to 3,78,200. And now here we are going to write This is sinking fund investment account, no? Okay. So now we shall write here 1/1/2026, balance brought down 3,78,200. This is the total balance. Is it clear to you or not? Similarly, we are going to tally out this particular account also. 31st of 12/2025 and at the end of the third year, here we are going to write balance carried down and 3,78,300. In fact, 3,78,300, I have written here 200. It is 300. So, after balancing the account at the end of the third year, of course, I will write on the opposite side on 1/1/2026, that is the beginning of the fourth year, and I am going to write here balance brought down, and balance brought down is equal to 3,78,300. 3,78,300. Is it clear to you or not? So this is the scenario. Now we are into the final year. As I told you, in the final year, obviously the first thing is that you are going to receive the amount of interest, and you will be writing here 31st of 12/2026. You will write here by bank how much interest we should receive. I have already computed 18,915, but as I told you, when we are preparing the ledger, it becomes pretty easy. Whatever balance brought down is there in the investment account, as you can see, this is 3,78,300. You simply apply the what we call rate of interest to it. 18,915. This will be my interest. Again, I am going to appropriate. This is my first step, correct, in the final year. Then I am going to appropriate the amount of profit. This is my second step, 1,20,000 in the final year. Generally, what we do, whatever interest which we receive and whatever amount which we appropriate, we invest it. However, in the final year, as I told you, we are not going to invest it. On 31st of 12/2027, we are not going to invest any amount. Is it clear to you? Now, we will have to balance this particular account. In order to balance this, first of all, we will check for how much we sold out the investment. So, as I told you in this particular question, it was given that we sold out the investment at the end of the fourth year. At the end of the fourth year, for rupees 4 lakhs. So, bank account debit to sinking fund investment account. This is my fourth task in the final year, sale of investment. That is equal to 4 lakh. After selling of the investment, obviously now you are going to balance this. You had total investment in your hand to the extent of 3,78,300 and you sold it out for rupees 4 lakh. Obviously there will be some profit, and the profit will be equal to 21,700. And this profit will be transferred to sinking fund account. Sinking fund account. This is my fifth step. The first step is interest, second step is appropriation, third, no investment, fourth, sale of investment, and fifth, we are going to sell it off. So this will be your balancing figure. Whatever balance you are going to receive, that balance will be transferred to sinking fund. Although in this case, it is a case of profit. Because we have written to sinking fund, so obviously now on the credit side of sinking fund, I will write here sinking fund investment account. Sinking fund investment account, and here I am going to write, this is sixth step, 21,700. 21,700. Now, in practical life, before tallying sinking fund account, now we will make the payment to the debenture. Correct? Debenture account debit to bank account, 5 lakh worth of debenture will be repaid. After that, we have to actually tally this account. So on 31st of 12/2026, when I am going to tally out this particular account, 31st 12/2026, I will write here to general reserve. Because if you remember in the last topic we talked about, when there will be no debenture, there is no point in keeping the sinking fund. Because debentures have been redeemed now, so whatever balance in sinking fund is there, correct? Now, we should make it free by transferring it to general reserve account. So, whatever balancing figure will be, you will tally it out and it will be equal to 5,38,915. So, this is how you will have to prepare if the ledger accounts are asked. In case if the ledger accounts are asked. Is it clear to you or not? So on similar fashion, we shall move over to the next question. Let's see what is given here. In 11.2, it is given to you. 11.2, let's see what is given. Never fail limited. It is not ever fail limited. It is never fail limited on 1/1/2027 issued 10,000 12% debentures of 100 each. How many debentures we have issued? 10,000. What is the coupon rate? 12%. What is the face value? 100. So 10,000 into 100, that means 10 lakh worth of debentures have been issued and repayable at the end of the 3 years. So this time redemption period is 3 years, but also it is mentioned at a premium of 5%. It is decided to create a sinking fund for the said purpose. So in order to redeem the debenture, director decided that we are going to create a sinking fund. The investment were expected to earn interest at the rate of 5%. Now you know the meaning of this. But here it is written that reference to sinking fund table shows that. Actually in the last question and the example which I took to explain the concept, correct? We took the example that every year directors have decided to appropriate 1,20,000. But in practical life, how the director decide that how much amount every year we should actually appropriate out of profit for this particular purpose? How they decide? And in order to decide that, generally they take the help of sinking fund table, and sinking fund tables are almost similar to your logarithm tables, which you used to take help of in your mathematics. So a reference to sinking fund table shows that rupee 0.317209 invested at 5% per annum amount to rupee 1 at the end of the 3 years. Now you must have noticed that in this particular question, annual installment is not given to you. So with the help of this, you will find the annual installment. This is the only difference between the previous question and this question. In the last question, we were given the amount of annual installment in an absolute manner, 1,20,000. However, in this particular case, we are not given the amount of investment in an absolute manner. Further, it is also written that at the end of the 3rd year, which happens to be our final year 2, we have sold the investment for 7 lakh. Is it clear to you or not? So in this particular question, the first thing which you are supposed to do is to compute the amount of investment. This is the important point. Is it clear to you or not? So similar to the last question, this question is, and only difference is that this time annual installment is not given. Question number 11.2. So first of all, in this particular question, I need to find out calculation of annual installment. Calculation of annual installment. Calculation of annual installment. So I need to compute the annual installment. In order to compute the annual installment, what I am supposed to do? In order to compute the annual installment, first of all, you need to think on such line. What amount you are supposed to redeem finally? Now, in this question, amount of redemption, amount required for redemption, amount required for redemption. Because here you have committed that you are going to actually redeem these debentures at a premium of 5%. So amount required for redemption will be equal to 10 lakh, because 10,000 debentures are there and having a face value of 100. So 10 lakh is the amount. But we are supposed to redeem them at a premium of 5%. So plus 5%. That is equal to 50,000. So that means at the end of the 3rd year, we need to have 10,50,000 in our pocket. Isn't it or not? 10,50,000. Is it clear to you? Now, in order to compute the annual installment, as I told you, what we are supposed to do. First of all, we need to hunt out the amount which we need to have in our pocket actually to repay the debentures. That happens to be 10,50,000. Isn't it? Now we have to again look at this particular figure. In order to compute the annual installment, so amount of our annual installment will be, see here. It is given in the question that 0.317209. if you are going to invest today 0.317209, and every year if you are going to receive interest of 5%, if you are going to invest today, correct, and what does it mean? Let me clarify. If I am going to invest today, correct, this much of amount, and I receive 5% interest on that, then by the end of the third year, this amount which I am going to invest will become equal to rupee 1. This is the what we call significance of this table. So 0.317209, if you are going to invest today, and for the next 3 years, if you are going to receive interest of 5%, then this amount will become equal to rupee 1. So with the help of this, now you can find out that how much you should invest today. Because we want that our investment should become equal to 10,50,000. Because we require 10,50,000. So how much amount I should invest today? So technically speaking, I could have told you in a very simpler manner that simply multiply this figure with 10,50,000 to compute the amount of installment. But that way around, you wouldn't have understand the concept. But now, I hope a bit of what we call conceptuality must have been understood by you. So 10,50,000 into 0.317209 divided by 1. So that will give you ultimately 3,33,069. Figures are memorized to me. That doesn't mean that my mathematics is very fast. But the point is, it approximately every year I need to invest this much of amount. So in this particular question, the main point is that we weren't given the what we call annual installment. So we had to find it out. And whenever annual installment wouldn't be there, quite obviously, a sinking fund table would be available. So this is the point in this particular question. And your final year is what we call third year. So on that particular account, we are supposed to prepare those two accounts, sinking fund account. So I will be preparing that sinking fund account. One sinking fund account. Sinking fund account. I think, okay, I will stretch it further. I will write here date, then details. Sir, can we write details? Yes, you can write details or particulars, and then amount, date, details, and amount. Similarly, now you are going to prepare your sinking fund investment account. Sinking fund investment account. I think this much is enough. So sinking fund, I have already told you, sinking fund investment account is also known as debenture redemption fund account too. Isn't it or not? So again we shall write here date, details, date, details and amount. Date, details, amount. Correct? So now, you have to think logically. I've already told you what you are supposed to do under such questions. So first of all, you need to actually immediately come to the credit side of the sinking fund account at the end of the first year. Now, in this particular case, our first year will come to an end on 31st of 12/2000. What exactly were the dates in the question? Actually, I've forgotten. Just let me have a look over the dates. Sometime it happens. On 1/1/2027, correct? 1/1/2027 is the beginning date. So at the end of the first year, we are going to come in the sinking fund account on the credit side on 31st of 12/2027. As you know, the first thing is that we are supposed to actually appropriate the amount, and we have already computed that what will be the amount of annual installment. So I will be writing here by P&L account, and amount appropriated is equal to 3,33,069. In the first year, only two things we are supposed to do: appropriation, and we have to invest this particular amount. So when I am going to invest it, the entry will be sinking fund investment account debit to bank account. So on 31st of 12/2027, I will be writing here to bank, and amount will be equal to 3,33,069. At the end of the first year, you need not require to balance. Although if you want, you can balance. Now immediately come to the end of the second year. 31st of 12/2028. Because now we are into the second year, the first thing which we are supposed to do is to receive the amount of interest. Now we are supposed to compute the amount of interest. How much interest I am going to compute actually? The point is this. Because my investment at the end of the first year is 3,33,069. So I am going to compute the amount of interest, and the amount of interest will be equal to 3,33,069 into 5%. Rate of interest which is given in this particular question is 5%. So 16,653 will be your amount of interest. This is the first thing which you are supposed to do in the second year and subsequent year. Obviously, I am going to appropriate a part of profit, and my appropriated amount will remain same, that is equal to 3,33,069. But the point is that how much I should invest. So I will be writing here, if I am going to invest this particular amount, I will write here 31st of 12/2028 now, because we are into the second year. We will write here to bank. Isn't it or not? We are going to write here to bank, and amount of investment will be, this is my third, in the second year, this is my third entry, investment entry. We have received interest of 16,653, and we have appropriated 3,33,069. So this much of amount we are going to invest, 3,49,722. So in the second year, we have passed the three entries, and we are now in a position to tally it out. If I am going to tally it, because I am balancing it at the end of the second year, that is on 31st of 12/2028, so I will be writing here balance carried down, and the amount will be equal to 6,82,791. And immediately you bring it down on 1/1/2029, that is your final year. Balance brought down 6,82,791. Is it clear to you or not? Similarly, you are going to actually balance your sinking fund account also. When I am going to balance, we are going to get the same figure, 6,82,791. I will be writing here 31st of 12/2028, and this is balance carried down. Now here I am going to write 1/1/2029. This is start of the third year, and the balance brought down will be 6,82,000, sorry. Balance will be 6,82,791. So this is how you are supposed to do the accounting till the end of the second year. Is it clear to you? Obviously, now we are going to reach the final year. In the final year, my first thing is at the end of the third year, that is on 31st of 12/2029, I am going to receive the amount of interest. What will be the amount of interest? The point is that. So for that, you need to understand that you are at the end of the third year. And in the beginning of the third year, here you can have a look. In the beginning of the third year, your investment is 6,82,791. So by the end of the third year, you are going to compute interest on this investment. Is it clear to you or not? So My investment is equal to 6,82,791, and we are going to compute interest on this particular amount at the rate of 5%, and it will be equal to 34,140 approximately. Is it clear to you? This much of interest. This is the first thing which we are supposed to do in the final year. Obviously, then we are going to appropriate the amount also. So I will be writing here by P&L, and amount will remain same, that is 3,33,069. This is my second. Now I'm not going to invest 34,140 interest, receive an amount appropriated, because now we are into the third year. In fact, we have reached the end of the third year. So at the end of the third year, we are not going to make any investment. We need not require to write it this way, but just for better understanding. Now we are going to actually move to the credit side of the investment account, and 31st of 12/2029, I am going to write by bank. That is sale of investment. Sale of investment. Now sale of investment is equal to 7 lakh, and here the amount is given clearly. Even in the earlier question, it was given that we sold out the investment for 4 lakh, and here it is given you sold out the investment 7 lakh. But on a rare possibility, it is also possible that you may not be given the amount at which you have sold the investment. In that case, what to do? In that case, you will presume that whatever investment you had in your hand, you are selling it out for the same figure. For example, if in this particular question, if this figure of 7 lakh wouldn't have been given, in that case, I would have had presumed that the sale amount is also equal to 6,82,791. Is it clear to you? So, this is my fourth task. Now I am going to balance it. I've already told you whatever balance you are going to get, you are going to transfer it to your sinking fund account. So this is your balancing figure. This is also your profit. In this particular case, your profit will be equal to 17,209. And with that, your sinking fund investment account will get closed. And now you are going to transfer the profit from sinking fund investment to sinking fund. So you will write over here by sinking fund investment account. And the amount is equal to 17,209. And now we are going to tally it out. In fact, before, as I told you in practical life, before tallying it out, we have to redeem the debenture. We will pay the amount to the debenture account debit, premium on redemption account debit to bank account, 10,50,000 will be paid off. But after the payment has been made to debenture holder, now whatever balance is there in the sinking fund, correct, because there are no debenture, so there is no point in keeping any balance in the sinking fund. So we are going to now transfer it to general reserve. So your next point is on 31st of 12/2029. On 31st of 12/2029, I am going to write here to general reserve balancing figure, and the amount will be equal to 10,67,209. You can also check whether this particular figure is correct or not. Sir, its check is possible. Yes, everything is possible. You can see actually you are supposed to pay 10,50,000 to the debentures, correct? This was the amount. And profit is your 17,209. So if we are going to add both these figures, this amount should strike a balance with this much, and it is striking. So this way you can check also. But anyway, you need not require to confuse that, need not require to develop any confusion. In fact, just pay attention over here. So this is how you are going to actually do these questions. However, in the examination, honestly speaking, I don't think so actually you are going to get such long question out of this particular topic. Then what sort of questions you are going to get in the examination? You are going to get in the examination question like 11.3 and 11.4, where only the last or final year's accounting would be needed. As we have already seen that in the final year we receive interest, we appropriate the amount, no investments are done, in fact we sell the investment. Only these 4 steps are required in the final year, and according to those we are going to use, and then as per those what we call step, we are going to solve out these 2 questions. But we shall do that in the next session. So till then, time to say goodbye.